Welcome everyone to the Kendall Report. Sorry for being a few minutes late. Had a few things to get set up, but we're ready to go now. So just a quick announcement for the, we're announcing a special on the indicators. I think it'll be interesting. They're 30% off, Kendall 30 if you go to kendallreport.com/indicators and put in Kendall 30 as the code, and you will get that. So anyway, let's get into tonight, man. Last night I emphasized a number, not bragging, but this happens when I start looking at these clusters of numbers that I talk about. So the number was 4277. Apologize to the Twitter folks. I put out 4470 or something. I don't even know how that got. I was in the middle of trading, just trying to help people out intraday. I usually don't have a lot of time to do that, but I was able to get it out there. Anyway, sorry for the typo, but you guys know what I meant. So 4277, I mean, it was amazing. We went bid there and it skyrocketed off of that number. And, you know, we traded all the way towards the higher end of the range of the day. Literally, I would say within 30, 40 minutes, it was there. And if you're using the indicators, you would have saw that the PPM1 was showing that it was a bottom, and the next hour, as we opened that next hour, it was going to turn. And that's exactly where this thing turned. It was amazing, I think. I actually caught it really well. So the fact that I was able to get some things out with what was going on here at the time was pretty amazing for me. The reason why I emphasize this number, not to go, hey, I was right. That's not what I'm talking about here, is that was the key number that came up from multiple analysis. If you remember, from 4277 all the way down, there was a 40 handle number, 4240, and even a 4228 number. And it was coming from not just the daily charts, but the weekly. There were other numbers out there that were just all focused in combination of Fibonacci targets, market grid numbers weekly. It was just way too much, and I was impressed. And I saw somebody, I feel bad, on Twitter going, they went to the gym to work out and came back to only see that happen. So I'm sorry you missed that. So, and I tell you folks all the time, and this is just a thing with me. And if I mention a number, it probably gets hit. I mean, if you look at how we started last night, overnight, we're actually rallied into that 4340 number I was talking about, which I thought we'd get rejected from. The number ended up being 36, and we traded all the way from 4336 down to that 4277 number, and then rebounded back up, and we're coming back up towards that 4320 handle. And I think this action, and the reason why I'm emphasizing starting off tonight, just talking about price action, is that when we see these type of things, you have to pay attention. So and I'll set this up when we go through the technicals and what things need to happen to basically confirm, validate, however you want to look at it. So I'll go into that in a few minutes. So just stay with the broadcast tonight so you can catch that part. Looking back on, the other thing that happened was interesting. Who led the way yesterday? The Russell, which is absolutely amazing, right? Russell was up 0.98. Meanwhile, the 10-year was printing 462, which is a crazy number. And, I'm trying to hold back until we get to the weekend, because on Sunday I have some long-term ideas and stuff, but there's some really, really big numbers starting to come out on these interest rates. And that's going to be a thing. So let me go through economic stuff, and then we'll come back and we'll talk about government shutdowns and all kinds of other stuff that's going on. So let's take a look at, we have, also we had mortgages apps come out. Sorry, my voice is breaking up. Mortgage apps coming out down 1.3. That's not a surprise. Durable goods were actually better. They were expected to be negative, and they were positive. So that's 0.2, not a big number. But then pending home sales down 1%, not a big deal at all. We come into Thursday's action, though, we're going to get a couple things. We'll get the claims numbers, expecting 211. I'm still looking for those continuing claims to come down a little bit more. It's amazing that the way that the labor market continues to be configured. We also get the GDP update. I think that's possibly the third update, possibly the second for sure, but that's expected to come in 2.1. I wrote down deflator, didn't put the number, but I believe it's right at 2% for the deflator. So maybe there's something there. This is a revision, so it's really not that material. And I'm not sure that any of these things that are coming out are going to actually matter from the standpoint of economic news and a trigger to things. So let's talk about a couple other things. And I started to touch on them last night. I talked about how the administration is on I guess we'll call it they're on track to destroy the automakers. First of all, they force them to make vehicles that maybe people want, but it's too expensive. They're losing billions of dollars making EVs. And I know it's funny because I had some people telling me last night that EVs is like a phone booth. They think they're talking to an old man, and they are, but there's an old man with some knowledge. And I just want to tell you, the chances of everything being electric, and I'm doing air quotes here, okay, with the current technology is forget it. It's never going to happen. Now, if they come up with new batteries, a new way to do things, and that's possible and probable, I would say as well. But current technology is not going to get you there, okay? There's not enough electricity, like I said last night. There's not enough materials to make the batteries. There's just not enough. But the 2035 agenda for all electric cars is the real issue. They're forcing the automakers. I guess if you see what's going on right now with the UAW, and you have the president of the United States standing in a picket line supporting the labor folks, I mean, how do you negotiate with anybody on both sides as a government when you've already shown your hand who you're for? So, I mean, this is a crazy situation going on here, and I just feel like they're stacking it up. Okay, so that's the UAW and all that stuff going on. Not going to go into a lot of detail. We talked about it last night, but let's talk about the government shutdown. I have Bloomberg TV on over here on my left, and I just saw they have. This is amazing. They have a counter, and when I was looking at the screen, it was 3 days and 6 hours to government shutdown, and so that's going to be a pretty significant event. But the problem with shutting down the government, they're just going to turn it back on as soon as they play all the games and all the noise and all that. And so we'll lose GDP numbers. I think for every week that it's shut down, I heard estimates of about 0.2 on GDP. The irony that we've got GDP coming out tomorrow. So all of a sudden that gets GDP if they shut it down for 4 weeks, we're at 0.8 and maybe 1%. So we go from 2.1 to 1.1, and then the next revision, when everybody comes back to work, will just kind of pop back. There's probably a small net loss, but not material. And none of this stuff is going to be material. It's all noise. But I was talking to actually my brother earlier today. We were having an interesting conversation about how there seems to be this thing that politicians, both sides of the aisle, just don't seem to think that their actions have consequences, that they can do whatever they want. And man, I hope we figure this out, those of us Americans here, at the next election, and get rid of a bunch of these people, get rid of anybody older than me, for sure. Get rid of the old folks, get some new blood in there. We need this desperately. And, we're just sitting here. We have really, really stupid people running the government. It's amazing how stupid these people are. And you can go through every part of the cabinet. It's helpful, like if you're a transportation, we'll just pick on transportation secretary, that you actually know something or have some experience in that industry. That would be really helpful. But we just have really ignorant and stupid people. It's crazy running things. So what we're walking into, folks, and I made the name of this video tonight, The End of the Road. And I think it's the end of the road, end of the quarter, and there's rebalancing coming in. And I'll just tell you, everything I just talked about is so negative, it has to be bullish. I'm going to say the quiet part outside. If everything looks so bad, I always, I'll share something, an old quote of mine, to get to a bottom of the market, the lowest tick on the market is the worst that the market could look at any given time. Otherwise, all the conditions, the prices get to the low and it looks the absolute worst. That is the low. And it's the opposite for the top. It looks the best that it can look. And then it finally I guess how's the best way to put it? It finally shows you the high, but it's those extremes look as bad as they can be or as good as they can be. And it's almost seems like we're at that point where things look so ridiculous, like what else could go wrong? Everything looks so wrong, it looks like we're going to fall off the cliff. And now we just may. And I've been telling you, just to continue on this little rant for a minute, I've been telling you that I was the guy last fall, this spring, through the summer, telling you no recession's coming. And I've been referencing this for the last week or so, that now all of a sudden you got everybody. You got the Fed, Goldman, every bank, every research department. Everybody's telling you there's no recession coming. But they were telling you it's guaranteed because of the yield curve. Remember that narrative? Now they're saying not going to happen. Everything's okay. And we're going to go on. Maybe somebody goes, maybe a soft landing, all those little cliches. And in spite of the interest rates going to stay longer, higher for longer, all those little cliches are out there. And the reality is that they're just probably overplayed all this stuff to get everybody negative. And I think they're trying to maybe talk up the market. Maybe they have some inventory to sell or something. And I know it's not quite like the old days when I was on institutional desk, but it's not that different either. That people have inventory and they want to move stuff. It's like nobody, virtually nobody wants to buy a bond right now. And, like I've talked about this before, in moments like this, there's a lot of people in the industry that I spend a lot of time with in the investment arena and investment advisors. And these guys are doing 60, 40, absolutely just getting hammered in moments like this. And I can't imagine what the sleep patterns of those people are like. And we've already moved a lot of our positions in the database. Appreciate somebody actually posted the database numbers on the YouTube channel last night. I forget who it was. Thank you for doing that. I appreciate you watching and being a customer. And I think that what we're seeing here, I told you we're going into full liquidation mode. All of these things are happening. Well, it's happening, and it's happened, actually. If you go back, and you can go back probably 4 to 5 weeks ago when the database started to liquidate, I thought we'd go to 42, and then if it doesn't hold 42, we'd go to 28 to 22. You'll see in just a couple of minutes where we ended up yesterday, and I think this thing's finally blown out. There's not much left, okay? So we'll go with that at the moment. But just to summarize what's going on here, is I think markets are pretty negative. There's still some downward pressure. There's no big turnaround as of yet, but we are seeing the kind of signs like today. If you watch that trade when we took out the 43 handle today, and I'll go through the technicals here in a minute. When we took that out, it was just a plummet straight down all the way right directly to that 77 number. So I think I've hammered on that enough. So let's go ahead and let's go through the database and get into tonight's stream and go forward from here. So here we are, and this is the wrong number here. Let me refresh this. So here's the right number. 11.67 is the bullish number on the short-term database. Yesterday, for yesterday when we were live right after that came out for this morning's opening, we had 1,606 sells, 81 buys. Basically, this database, this is what full liquidation mode looks like. We could go to 8 or 6%. And that's it, folks. So what happens from here? Let's talk about that. What happens from here is typically what we're going to get is the market. I've been talking about it needs to stabilize at one of these key numbers, and we just kept going down and down and down. There's just everything got demolished. And so what happens now, this is a longer rebuilding process than where we are here. So as we come into September, we're printing down, near the lows of the month here, and it looks like there's a possibility, and that was the theme here, is the market about to go through a rebalance. And there's certainly a lot of choices out there, and that's what I'm going to be watching for the next couple of days to see if we can get any kind of rotation to come in at the end of this quarter, because we just got a few days left in this quarter, and maybe today was the puke out period where everybody got rid of stuff. So one of the things that I'll talk about, I may come back up on screen to go on this, because this will be, I think, somewhat of an interesting conversation. But you have to ask. Matter of fact, let me just come back up just for a second here. Yeah. So what I want to talk about here is if you're going to rebalance in your institutional account, this is what we have to be asking over the next several days: is what is it? Where am I going to rotate to? And did we see the beginnings of it, where the Russell caught that bid today, where Russell led off the lows, and meanwhile the Russell led, but the banks were all down. So I haven't had a chance to really break down and see if I could determine what elements inside the Russell were moving the index. Typically, all these indexes are top weighted or a cap weighted type situation. So there's a possibility that maybe some different rotation came into play. I've been talking about these zombie companies. Somebody, as the 10-year prints 4.62 and looking like it wants to go lots higher. Is that what caused this? And the only thing I could come up with, I don't think it was the 10 years not a positive for these zombie companies. I just feel like there was some shift. Somebody moved some money around today. And some of the big players out there that are looking at rebalancing, most people, it's not mutual funds and retail type stuff. There's big institutional books of business and things that people are going to move around the inventory as we come into the end of this quarter and start to think about what's next. And like I said, there's a complete, cluster of things coming at us from the standpoint of all the things I talked about, the UAW strike. You got the government ganging up on the companies. How would you like to be a major company wondering, man, are we targets next? This was some of the contagion that I talked about the other day. But if you're a portfolio manager and you're looking forward to the next quarter and beyond, coming in to the new year and being an election year, what is it that you're thinking about as far as what type of things do you want to rotate to? So where we're going to pick up on some of these things is watching what does happen. And like I said, it was interesting how the Russell was trading. Matter of fact, the Russell was kind of the key that we're going to get a turnaround today. Sometimes I wish I could just be live and hang out with all you folks and stay live all day and just talk and trade and do all that stuff like I used to do in my live room. But the bottom line is that was just staring at me. It was like, the Russell is up. So why? I started asking these questions earlier, and being a good trader and being a good investor is asking the right questions. And part of that was, why is this happening? And the more important question now to ask, is it going to continue to happen? And is this part of a larger scenario of some rotation in the market? That's all. I've argued for years, folks. I know most of you have known me for a few years now off the YouTube channel, but I've worked and been head analyst at firms and all types of things. And I'm just telling you, this is one of those things that you always want to watch, because our job, all of us as investors, an advisor, any of that, is to actually identify where the next rotation or where the money's going. Because money tends to hang around the markets, whether it's going into short-term T-bills or whether it's going into some hot asset class like we had AI crank up pretty good with NVIDIA and all that stuff. All of this stuff is just cash flow analysis and where it's going to go. So I'm just putting this out there to you folks to think about it. I love the comments on the channel. I wish we had about 10 or 20 times the amount of people on here and that you folks speak up. And I know I see the timeline working, but I just want to propose that, because this is what we have to figure out. If we figured this out, and I've been really good at figuring these type of things out, so hopefully I come up with an answer. But just like, it seemed crazy back in December and January of last year to be talking about buying home builders. Who would do that? Well, they're up, they peaked out at around 120%. A lot of them were up 80 to 120%. That was hands down one of the best areas to be involved in the market. So, just trying to find out where this rotation is going to be. It's going to be important for us to be able to determine what type of investments, and especially those of you that my advisor clients and you that are using our software, is where do we rotate our constituent list to get in front of the next rotation. Excuse me, my voice is cracking up tonight. So just make sure that you be thinking about those things, and I'm going to be thinking a lot about them. The second I have an answer, I will let you know. But it's interesting because I want to dig into the things what moved the Russell yesterday or today, meaning on Wednesday. So anyway, back to the show. I just wanted to bring that up because I think that's really important as we go forward. All right, so we'll start as always with the hourly chart on the S&P. And this little spike low here, this is when we came into that 42.77 level today, that was turning up. I'm like, okay, the next hour that printed the low, right? And the forecast on the indicators was that the PPM1 was going to turn up. Actually, all three of them were showing a slight uptick, but PPM1 was actually a pretty defined moment. I'm sure many of you saw this. When you see that, so you have a bar, what did I just say a minute ago? The worst it can look, and it was, that indicator was down. It was extremely down, but the forecast, the next bar was being forecast to go up. And what we did, we ran right up back into the moving averages. And that 1 hour move was after the initial 42.77 click was 42.80 to 43.18, 40 handles in that hour. And I could break it down, bring up a 5-minute chart. It was even faster than that. It actually happened much faster. It was like 25, 35 tops, maybe 5 to 7 bars on a 5-minute. And that was absolutely, it was crazy when it was happening. I was fortunate enough to have some positions on off of that 77 print. Didn't buy 77s, but was in pretty close to it because it was there, and moved that quick. It was a snap of a finger and it was gone. And so this is the pattern that sets up. Now what it's set up for as we go through right now is we're looking for a slight downtick, maybe around the time I end the stream. And then there's some more upside all the way into just about that hour before London. So I look for stability with the possibility of the markets going higher up into that range there. And that should be peaking out right around London. Then it looks like back and stable overnight. And really, these algos are going to change quite a bit with another 5 or 6 bars in here. So, but that looks like what we should see on the hourlies. And you have some downward pressure yet here coming in at the 40-hour moving average, 43.28. Let's go to the market grid on the dailies, and that will help us to really hone in on this pattern. All right, so as we look at this, this is good because this is the same setup that was on that hourly chart. This is great that it's here, so I can make this a teaching moment at the same time for those of you that have the indicators. Is right here, if you look at the solid white line on PPM1, this is how the hourly looked today. And the forecast for the next bar, which is not tomorrow, it's the day after tomorrow. So as we come into Friday, what we're looking at is potential for a turnaround, and it's suggesting that maybe we can cross over by the time we come into Monday, Tuesday of next week, and maybe retest that downward 10-period moving average. And so we're going to have to watch this stuff. The other algos on the PPM 2 and 3 suggest still downward pressure, but that's appropriate because both of those averages are way above the markets here. The 21 is 44.58 and the 40 is 44.57. So they're almost identical and they're declining, and that is where your ceiling is going to be. We're going to have a very, very difficult time getting above those averages, and they're declining. So that number is dropping every day. So once we get into that pattern and it starts to set up a little more and we see it, there's also kind of hard to see, and I don't know how, there's a couple of red dots here which are a pivot level, and that's at 44.58, and that's telling us that that's probably an area to watch for a rejection. I don't think we get there tomorrow. We certainly could, but I think that's going to be a number to watch. If we were to close over 44.58, then that would set up a further rally. But for right now, look for rejections off of that 44.58 level, and we'll look at the market grid. I want to go to the market grid real quick for Wednesday first, and that number's, if you look here, if you recall S3, I thought, well, we could get to S3, which we did just about, but it was 42.73. The 42.77 number came off the weekly market grid, and then we got that bounce here. So if the high was 40, actually ended up to be 36, and R2 was 42. I told you we could get as high as in that 40 handle. We initially traded off of there. If I brought up like a 5-minute chart, you'd see we traded up early in the session, and then we came back in on this pattern all the way down to 277 to 42.77, and then we got that reversal. So now, as we go through today, and we didn't quite make a positive close. I was hoping that we get a positive close. If we would have closed over, I put this on the Twitter, if we would have closed over the 43.27 number, that would have actually really been like super positive, where you would hear me talking right now about a reversal pattern. So as it turns out, we didn't get the reversal. You can see market grid is kind of flattening out. This was not the epic event that it could have been with just a little bit more buying. So we still have lots of work to do in here, and there's still a possibility. So let's go to the grid here and just talk about a couple things. S2, 4283, that's going to be your mark to watch. I don't think we get them below that. If we do, then you get a complete retest of yesterday's low, maybe even a new low, because you can see here, S283, 67, 4267 is S3, and then extreme is 4253. So if we print down through that 77 number tomorrow, then there's still more work to be done here. And this would coincide with today being probably the final negative day. Excuse my voice. I know it's been doing this to me lately. But the final negative day. And then ultimately what will happen is we'll rally to test the downward sloping 10-period moving average, which will probably come in at that number I just mentioned. 4450 is probably going to be hard. I remember just a few days ago telling you getting back over 45 is going to be pretty difficult. So we'll stick with this analysis here, but watch for two things for tomorrow. Yesterday's high, which was 36, we take that out, then all of a sudden we're looking here at R2 is 43, is very similar to yesterday because the grid actually did something where I talk about it being in a box. So the top end of the grid flattened, and as did the bottom. And so when you get that type of pattern, typically you're starting to formulate maybe some sideways pattern that possibly by Friday we can get this going. There's only a couple days here, tomorrow and Friday, to get to the scenario as far as setting up any kind of real big rebalancing trade or something like that. I don't see a giant trade coming in here, but as we come into Q4 and we go through Sunday night's video, hopefully I can identify this. A lot of the things that I'm going to need to talk about on the long-term analysis won't happen until Monday night. So it'll be, you're just going to have to be patient, watch these numbers real close. I'm not sure. Unfortunately, we didn't get the higher close, so I'm not going to call the low of this pattern at this moment. There's still some potential on the downside. And if you go to the weekly chart, let's just go there while I'm talking about this stuff. But let's establish the potential range. We're going with R2, which is 43, 43, and S2 extreme. So S2, R2, more volatile day. 42.83 would be the extreme. If we hold 99, if we can't print through S1, then S1, R2 would be the number. But I'll use the S1 on the downside as a pivot. Yeah, let me go to this number here real quick, and you'll see. Excuse me. You'll see 4277 was S3 weekly. 4252 is RTX on the weekly level. So that was what we got to bounce. If you look at the weekly chart and look at the price action here, that's not really anything to get super excited about, except for not only is the daily getting that potential bottom formation for Friday, but as we come into next week, everything's pointing to rallying back toward the moving averages. And that's probably putting us back into, I said, that 44.50 level. I'm sorry. Yeah, this would be a little higher than getting over the 43.58 level would put us back toward the 21 period moving average. 44.11 is where that is there. So a lot of work to be done. All right, we'll go to NASDAQ next. Should be able to roll through the rest of the show here. I went through quite a bit of breakdown on some of this others. Some of these other patterns here. So this is weekly NASDAQ we're looking at. It's trying to turn up. We do have some fib targets right at where we have traded down to. Fib target 1 is, let's see here, we're looking at right now a low of 14,586, and the fib target 2 is what we're looking at here is 14,482. So let's just round it off to 14.5 here on the NASDAQ. Everything looks like, at least for a little bit, that we could rally back to these moving averages or back toward them on the weekly basis. Same thing on the S&P, but it's not indicating any big turnaround, big rally. And in the end, it'll probably, if we come back here in hindsight for 4 weeks from now, we're going to go, oh, it was in a sideways range. Here's the range. So this is certainly potentially at the bottom end of the range, and the top end is probably going to be staying below these averages. Let's go to the daily. So the good thing on the NASDAQ, we actually got a positive close here. We actually were able to squeak out a green bar. As we look at, there's a number just right above here. Like I said, I don't know if it's easy for you folks to see this, but I'll try to point them out the best I can. Is there's a couple red dots here, and that number is 15,270. See, that's the wrong number. Hang on, let me find it. 14,904 that's probably the ceiling for this pattern here. Also coincides within the daily market grid as well. But we did get a green bar here. But to me, the grid did turn up here on the NASDAQ, which tells us there's a slight bias to as far as the positioning and range. So an S1, R2 is fairly likely. And when you get volatility kicking up like we saw today, you might see S2, R2. So these type of configurations can expand a little bit. So just be careful doing getting bullish at R1, expecting R2, and then getting caught in some rejection or something like that. All right, here's the Russell, and this goes to the questions that I was asking when I came back up on screen. Is this potentially the rotation? Now, there's nothing exciting here looking at the daily chart, except for the algos are starting to suggest that we're going to see strength coming into the Russell, which is sort of interesting, right? So you're looking at this pattern coming up in potentially back to around 1820, 1824 range, something like that. It does look, I wouldn't call it bullish, but it does look like a recovery off of this last decline could start. Let's go to a weekly. Now, this is the cash that we're looking at, not the futures. So let me just bring the weekly up. And weekly, this is sort of interesting because weekly is still lagging a little bit from the standpoint of than what we saw on the NASDAQ and what we saw on the S&P futures. They're more defined that we're going to get a turnaround. So obviously, if the NASDAQ and the turnaround, we should see some participation here. So there's no, at the moment, I'm going with the rotation isn't clear if it's happening, and that's what. As far as is the rotation going to the Russell, I don't have any evidence at the moment that that's going to happen. The fact that we had one day where it outperformed doesn't mean much, other than, this is why I came back on screen, was to alert you to pay attention to any types of things that are different than what we've been seeing. So, most people, obviously in a trend, you keep expecting the same things to happen. There was a couple of weeks ago that every time the market opened lower, you could buy it, and it rallied a substantial rally off the open. So you watch for these patterns of setup. I remember talking about it on the channel. They just were giving money away every morning. It was amazing. And same kind of thing here. Our job is to pay attention to see if there's a rotation. There is 0.0 that tells us that that is happening, other than one day we outperform. Maybe that's what's going on, but we need to see this follow through. We need to see more of market movement and cash flow go this way. That maybe tells us maybe fourth quarter, since this stock, if you were a market participant, which you are, and you were looking for something cheap, you're not going to find it probably in the NASDAQ. It's going to be hard to find. Not as hard, but there are finds out there in the S&P. But when you get to the Russell, I mean, there's a lot of cheap stuff out there if you're looking to buy cheap and not necessarily good. Some people look for cheap and not good, and there's probably cheap and good out there if you look. And those of you that have WaveTech, you can go to our screens that we have on portfolioexpert.com, and you can look at those screens and see what kind of metrics are coming out of some of the small cap screens that we have up there. Might be some location for some ideas from that standpoint. All right, got to roll, folks. I only got about 15 minutes to get through the rest. So let's. This chart's amazing to me, and I'm going to show you a longer term chart. And I think I put it out there the other day. I remember thinking we wouldn't be able to get to fib target 3. Let's talk about that. This is the fib target that came out back on May 1st, and the targets were 401, 430, I'm rounding off, and 450. I thought, man, that's going to be tough to get up there. Maybe we retest this high over here at 409. That puts us into that range. That could happen. I could see that. But seeing this just rally like it is, and now this is the weekly chart here, and we're just exceeded all the Fibonacci targets. And I think you're going to find this, and I love when I do these streams and I can connect the dots as we go through in a real-time mode, because look what's happening here on the 10-year. The opposite of what's happening on the NASDAQ and on the S&P 500. It's a weekly chart. The weekly is the algos are turning down. It suggests that this momentum is going to start to die off. You can see it on the WTARs, the predictive SMAs. You can see they are continuing to climb, but they're flattening out. What's interesting about that is maybe we get a little interest rate relief as we come in to the beginning of the quarter, and that will help us to identify what type of rotation we're likely to get or where this thing's going. Rotation could be to cash and more downside, folks. By the way, I should have mentioned that. But the realities are it's usually going to flow from somewhere else. Like right now, money's flowing out of treasuries. This thing's bleeding. This got this is a traumatic cut, and the arteries bleeding. They're trying to bleed this thing out. So from the standpoint of this pattern, it does look like we're going to start to peak out in the next week or so. And I mentioned some numbers around 470, but when we start to go out longer in the pattern, and I punch out here and I go to a monthly chart, then you get these crazy predictions. And typically, if we're going to get what I call an island top, you folks have heard me talk about this all the time, is that you get one Fibonacci targets to the upside, and then the next bar they disappear. That's what I call the island. When you start to get where it goes multiple 2 and 3 weeks going forward, this is a monthly in this case, when we get the update on the monthly when we come into October, if this number continues to calculate, and it should, then that tells us all of a sudden we have to start to pay attention to these Fibonacci targets, because and these are longer term if you look at it, because what we're doing here is we're looking at the it's going to take multiple months to get to that level, and we look at everything here. I don't think these are very realistic, but I have to mention them, and I'm going to start not focusing on them, but bringing them up as a perspective. The very first fib target is 6.47% on the 10-year. And what have I been telling you? And I haven't done a yield curve analysis, but what I've been telling you is that the front end of the curve is going to flatten out and the back end is going to begin to climb. And whether we go all the way to this number, which is crazy, 6.4, that is, I guess the best way to put it, that would be pretty insane. And there's definitely some, there's going to be a hell to pay on a move like that. But what we're seeing here is at least that still an acceleration, and the PPMs are at really robust levels at 1.25. 0.25, not a whole integer, but 1.25 or 0.25 is the trend. At 1.25, it's like so robust, the probabilities become very low to penetrate these moving averages, and that the trend is going to fully dissipate anytime soon. So that's why I'm bringing these numbers up and putting them out there. When we get into the longer term analysis next week with the final quarter of the year, then we'll dig a little more into this. But I felt like it just kind of flowed that we need to talk about this. All right, we'll go to crude oil next, but I had to stay with this. This is the monthly chart of crude, of the crude futures, and this is, I think I showed you this number, but this is also crazy. I talked about this maybe way too much, especially if you're watching every night, which I know a lot of folks do. But what we're seeing here is the same. This is a monthly chart, a similar type. These big projections are coming out of crude oil, just like in the 10-year notes. It's amazing to me when I see this. Is look at the target. Listen to the targets for crude oil: 160, 197, and 220. Now that'll make the yeah. I'll just leave it alone. But that, I don't know. Maybe they're going to decide to buy the SPR back. Who knows? But I think that that's going to be fairly interesting, to say the least. But look at the algos; they're still projecting higher all the way into March, or basically that momentum's going to stay positive all the way into March, and doesn't really look like there's even a turn until we get into maybe next summer, pre-election. So this is a crazy number. All right, let's come back to reality here. The weekly pattern is trading up almost to, it is trading at RXT. RXT is 93.91. The high's been 94.17, and it does look like on at least a weekly level that we're going to peak out in momentum, but that does not mean that price is going to roll over anytime soon. In fact, I would suspect all the way into early November before we even have a shot at rolling down through like a weekly 10-period moving average. Doesn't mean that we can't come out and test these averages during this timeline, but it does suggest that there is a ways before we even get to peak values in here, and it would have to take some massive. I have no idea what would cause that to go on, and I think there's more upside risk if there's just based on, it's like, I don't know if you notice, it's like nobody talks about Russia, Ukraine anymore. It's just kind of a thing. It's just there. And, there's a lot of risk. I mentioned this, especially coming into crude oil. There's a lot of things that can go wrong with Russian production, with all types of things that could disrupt this at the next level. So just know that, and it's also interesting because the Russians are hanging out with in the Arab nations quite a bit, especially since the war. Like if you go to Dubai, there's a lot of folks hanging out there from Russia, and there's other areas as well that they've migrated to, but also there's a lot of business going on through there. So no one knows exactly what's going on, but I can tell you one thing. The Saudis and everybody keeping the caps on production, this thing doesn't look like it wants to go down. And especially looking at, those are insane numbers I just showed you on the monthly chart. All right, so we're going to have to say some kind wishes for Peter Schiff, because gold got hammered today. We're under the 1900 level, and we're pushing the targets from what I've been talking about. We got Fibonacci targets coming in here, folks, all the way down toward, this is a weekly, toward the 200-week moving average. Fib target 1, 1826. The 200 right now is 1817. And so this thing just looks worse and worse. And based on the analysis of the interest rates and things I just talked about, you would expect that to happen. Just a quick note, please remind me tomorrow night, those of you who are here every night, I know I see a lot of names, I would say, please remind me, let's cover the Dow at the end of the week as we come into the final last few days, and see if I can come up with some ideas there. But on gold, this thing's in trouble. The only good thing happening here, this is a weekly chart, if we stay down below the STX number, which is 1911, we're going to get a STX buy signal, which would suggest 1 to 2 weeks of sideways movement. And the algos are suggesting, now let's take a look at that there's one more week down and a possible turnaround in the second week of October. So depending on how far it gets, will depend on how long-faced that Peter Schiff gets before he's starting to question his, well, no, he never does that. Anyway, but anyway, this is suggesting the second week, but there's other issues here because PPM 3 is in a steady downtrend, and we're looking at downtrends here into first quarter, coming into February, March, even April as we come into next year. All right, so we'll do Bitcoin. This is a weekly Bitcoin, and I got the wrong exchange out. Let me do this again. Here we go. So it continues to hover right around that 40-week moving average. I know it's kind of a broken record, but this thing just continues to adhere to what I've been talking about. The PPM 1 is starting to turn up. PPM 2 and 3 are really neutral with some slight bias, so that we're sandwiched between the 40 and the 21 week, we're 27,780. I'm rounding off numbers. And on the downside, we're looking at the 26,251. We're trading just below that number, 26,323. So we should hover right around here and just trading between those numbers. PPM1 looks like it's trying to turn up, but we're extremely negative because we're at minus 0.137. So there's going to be a ton of resistance at, we're just going to round it and say 27,000. So look for that to narrow in and ultimately make a move. And whether we end up, you never can tell whether we're correlated or non-correlated with the equity markets. Sometimes it is, sometimes it's not. So okay, folks, that's going to do it. There was something I wanted to make sure I mentioned when I came back on, and right now I'm not remembering what it was. But just know that there are some, somebody was commenting about the stupid people that don't even know they're stupid. So, yeah, anyway. I really appreciate everybody watching. We got one more day, and then we'll be on at the end of this quarter, one more video for tomorrow night, and then Friday. So we have two more trading days. I don't know if we get any type of rotation, but I am trying to watch to see what's going on there, because that's going to be probably our next good investment idea. And, like I said, man, I've been on a run for about 3 years if you pay attention. If you go all the way back even to 2020, there was some amazing calls made on airlines, and then finance and oil had a 2-year run. We had 2 really good years with oil, and now maybe oil's coming back into play. Those stocks get kind of jostled around. I did a ETF hack, and I took all the quality constituents from the ETF, all the lists, and put it into our software and ran that. It's done really good. I haven't looked at it for a little bit. It was a really good trade last year when the markets were down 20+%. That ETF hack was up around 44 or so. It was a really, really good place to be positioned. And I am an advocate always of concentration of bets versus diversification. And I will quote one of my mentors, Frank Savetic, may he rest in peace, but he used to always say, that diversification was the fastest way to moderate gains and moderate losses that he knew. If you wanted to get rich, you concentrate with a good strategy, and that's how you make money. And I've spent that. He told me that in probably 1982, possibly 81. And I've never forgot it, and worked with him for years and watched him trade for a living into his 80s. It was pretty phenomenal. He's a legend in my mind. And I'm grateful to have had him as a mentor and a friend. But listen, you concentrate your assets, make good bets, have good strategies around them, you'll make a lot of money. So with that note, have a great day, good day trading tomorrow, and I will see you tomorrow night, same time.